everybody. Welcome to the Closing Beat. How you doing today? Hope everybody is having a great day out there. This is a quick show that we do. We call it the Closing Beat. We'll be here to help you here today. Talk about the stock market and everything in between as far as it relates to your dough. We've got a couple interesting things we're going to cover today. So we'll dive in here. Play the game. Guess the Dow if you want to play. If you're the closest without going over, we'll send you a $100 gift card. Or if you're one of our customers, you can have your account credited if you prefer to have that. No strings attached, but you're welcome to play. Go to jazzwealth.com/guess the Dow. Your jazz song of the day is First Circle by Pat Metheny. You want to test your 22/8 time signature? Come on, man. That's a cool song. Be sure to check it out. We're going to give you the jazz song of the day and leave a comment. Any jazz songs out there you like? Remember, jazz is everything, man. It doesn't always have to be traditional jazz. I think Pat Metheny did a good job with that. So anyways, that's your song of the day. Let's dive into it. You got the Dow lower by, well, let's call it flat on the day, by the way. You got 5 points on the S&P 500 and 10 points on the old NASDAQ. We take a look at the markets here today. We'll go over to the chart so you can see. S&P 500 hit new highs but kind of faded away throughout the day. The Dow was the weaker performer out of the group there. It was the first to go negative on the day as well. Russell 2000 beats out all the major indices today. It was your outperformer. Beats the S&P 500 in terms of performance. And it managed to close the day up just over 0.5%. So a little bit stronger there. It's only up 0.5% year to date. It has been holding itself back just a little bit. But that's basically the performer there today. As I mentioned a second ago, you have the S&P 500 small up day there. It started strong. You had Jerome Powell testifying in front of Congress there. Some interesting comments, I thought. And then we just kind of faded away after the Jerome Powell comments there in the testimony throughout the day. It was just kind of seemed like we were struggling to get things going, and that's largely because the super duper mega cap stocks out there chose not to participate. Your Microsoft and things like that were lower on the day. We'll cover those things as we go. Earnings wise, after hours here, you got Lyft. Now, the conference call is going on right now, so I'm not entirely sure what may be happening there. Their conference call starts at 4:30, a little different than some of the other stocks out there. But Lyft reporting earnings, they lost less than expected. They lost 20 cents less than expected. Revenue came in better than expected. Shares are down. I believe stock's down over 4% here after hours. Down about 4%, trading over at 51.71. So you can see it on the charts there. Got a little bit of a gap down after hours. I'm going to bet that it has to do, unless they say in the conference call if it's still going on. Remember Uber the other day? So Uber reported earnings, and they also updated the fact that they would be profitable by the end of the year, not into the next year. So shares were higher on that news. I don't think Lyft did that. I just looked real quick here. I don't think they did that. But revenue per active rider was up nicely. And that law in California, the gig economy law, Lyft says that they've already guided, their guidance includes that kind of being the way it looks like it's going to be. So anyways, Lyft down just a little bit after hours. In the Dow, you've got some of your better performers today. Caterpillar up 1.3%, outperforming the major index there. They've reopened most of their Chinese facilities, so the stock getting a little bit of a bump on that one. Intel was higher on the day, 1.5%. Just strong with the semiconductors. They had a good day today, actually. We'll go over that in a second. Verizon was your biggest mover to the downside, losing 2.5%. That's going to be because of the big T-Mobile Sprint merger. Did you happen to see that one today? We'll cover that as well. And Microsoft, as I mentioned just a minute ago, it was an underperformer today. Down 2.25%. It was just an overbought sell-off. That's really it. Just a little extended pullback there. It was up on no news, down on no news. There's really no news to focus on there. So that's that one. In the S&P 500, you got T-Mobile US, TMUS is the ticker symbol, higher by 11%. They got their merger approved there. So Sprint, you might notice, was higher as well, 77% merging, of course, and getting that approved. It still has to be approved in California, I believe. But overall, that worked out for them. Dish Network's higher on the day, breaking over the range there. That's going to be one of your outperformers as well, up 7%. Remember, they're going to be competing in the mobile space as well, and that was largely one of the reasons why they got this deal done now that they're able to compete. On the downside, you got Under Armour hitting new 52-week lows. That's all going to be because of earnings. If you look at Under Armour's earnings, well, if you look at the stock, it's now down over 25% on the year, just on this year. They had a loss for the quarter. They warned that they used the coronavirus as a sort of an excuse that there would be likely some issues there going forward. And they're considering restructuring in 2020. That's how the mighty have fallen. This was one of the really hot stocks there for a while, but shares were lower on that one. And also you had Facebook in the S&P 500 week on the day, almost losing 3%. There was a downgrade at Pivotal Research. They said that the regulatory issues were going to hurt their advertising growth. And then all of a sudden, there was some regulatory news that came out today that the FTC is going to be looking into some of these private acquisitions that they've done, the smaller ones in particular, to kind of get more transparency on that one. So that's the different markets there. Go sector-wise. I mentioned a second ago, the semiconductors look pretty strong on the day. Up 2%. It was a broad-based rally. Basically, everything participated. A lot of the names in this sector gained over 1%. Many of them gained over 2%. It was just a really strong rally there. Oil getting a little bounce off lows. It didn't hold though. It was up over 1% on the day. It did fade after the physical, the sort of pit session closed. The electronic session, then we saw a little bit of a fading into the close there. But you had a lot of the names in that space. The oil explorers, they did start the day and finished higher on the day. OIH is one that we look at. OIH up almost 2% on the day. So a lot of those got a good bounce because of a small bounce in oil, at least to start. XLE up 1% as well. If you look at financials, they were back up to highs briefly, just poked to new highs there today. And really some of the names that stood out were the insurers, like MetLife up 1%, Allstate up 1%. Allstate was up 1% as well. And Progressive also just slightly higher on the day. But some of the names that stuck out there in that financial space happen to be in the insurance area. REITs hitting new 52-week highs there. It's going to be largely due to your T-Mobile Sprint merger. American Tower, it's a cell tower REIT. American Tower was higher. That kind of started yesterday. And Crown Castle also higher on the day. This is all higher in sympathy with the merger, the Sprint T-Mobile merger there. And of course, Dish being able to participate as well. They're going to have to buy Spectrum from them. That's kind of a whole separate story. Consumer staples did pull back there just a little bit. You had some weakness in Colgate. Remember, that's extended. We own this one here, so we're watching it every day. Colgate pulling back after being kind of extended there. You never like to see a stock move too far too fast. And Procter & Gamble just failing on that breakout, at least for now, down 1.5%. Consumer discretionary, there you go, poked to new highs on the day. Amazon's going to be the reason for that. Amazon also poking a new 52-week highs, up nearly 10%. I believe even after this close, it's still up like 8.5% just in February. It's only February 11th, right? So pretty good move there for Amazon. Interesting if you saw the Fed chair testifying today in front of Congress, somebody took it upon themselves to point out a picture of Mr. Jerome Powell, the Fed president, leaving a party at Jeff Bezos' house, and he was all decked out, looking good there. So they tried to make that an issue. He played it off pretty nicely there, I thought, and no reason he can't go to those things. I just, I don't buy that. So you got a lot of choppy areas of the market as well. You got transports chopping around back and forth. That's going to be an issue in the short term. Mentioned this yesterday. Retail popping back and forth here, chopping up the short-term traders. If you are a short-term trader in that space, it's likely not going well for you. Basic materials, about 0.5%. I don't know that there's a lot of people that trade that. And healthcare, although it was higher on the day, kind of a wide, choppy range there. So something we got to work our way out of, right? If you want to see the markets really pick up steam and get going again, or just pull back, you got to have everything starting to move together. We don't have that right now. Gold closed lower for the first time, lost 0.5% lower for the first time in 5 days. It's been slowly higher, little by little. We got news, of course, that the number of cases for the coronavirus has been slowing down. I brought that up the other day. We were talking about kind of what analysts are looking at there. And so that's that. That's basically your sector breakdown for the day. Let's go over to a couple stocks here today. AutoNation, a little higher, up 6% on the day. Basically, I mean, almost turned positive. Almost turned positive on the year, but with that close, that's not going to do it there. AutoNation beat by 16 cents. Revenues as expected. Everything looked good there. They said there was an uptick in pre-owned vehicles, so they were doing well in the pre-owned space. They saw sales improving there, and of course, that helps the stock. We don't need to point out the T-Mobile and Sprint deal there. Of course, you guys know what's going on there. Both shares had a good day on the day. Boston Beer, ticker symbol SAM, up 7% on the day. Kind of attempting to move out of that wider range that you're looking at there. So, I mean, looking good there, I mean, in the short term. There was an analyst that was bullish thanks to their efforts in the hard seltzer space. I don't get it. I honestly just don't get it. Why buy hard seltzer? I went to this thing. It was a charity deal, and they had like all the beer makers there. And then there was this hard seltzer stuff. I'm like, I don't know. I don't get it. I don't know why you would drink. I'm not a beer guy myself, but I just don't get why you buy hard seltzer. I don't see that being something, but hey, this analyst anyways was positive on that. He put his price target to 5.25 from 400, so it's currently trading at 400. He's now thinking 5.25 over the next 12 months there. Goodyear Tires, this was a horrible earnings report, by the way. They missed on earnings by 34 cents, just barely staying profitable there. Weaker sales, just challenging all over the world there. They threw in the coronavirus thing, saying, oh man, that's tough as well. It just wasn't good for them. So that stock almost hit new 52-week lows, lost 12% on the day. You got 65% of the S&P 500 above the 50-day moving average. That's a small uptick from yesterday. Not bad there. 78 new 52-week highs today. That's double yesterday. T-Mobile naturally going to be in the mix there. Crown Castle, American Tower, the REITs that we talked about because of the merger and everything. You had AMD, there you go, poking a new highs as well. That should help out whoever it was that had that put spread there. That should do the trick, right? Got a profit? Take your money and run? Huh? NVIDIA hitting new 52-week highs as well. That's 2% higher on the day. Waste Management hitting new highs. Just a beast of a stock here. Really, both of the major players in this space. Trash collectors. Republic Services hitting new highs as well. That's a steady, strong uptrend there. So looking pretty good there. That's what I have for you. Now, I've been getting a lot of questions on this, the old Carnival. Royal Caribbean, Norwegian healthcare. So I'm going to attempt to do my version of the old Kramer thing. Let's dive into an analysis of the cruise lines here, because cruise lines have been hit just about as hard as anywhere else out there. If you look at some of the different areas that have been affected by the coronavirus, they've done pretty poorly. Let's take a look at a chart here. Here's the recent performance on January 17th. Each one of these cruise ships hit new highs. You've got Norwegian Cruise Lines in blue, Carnival in orange, and Royal Caribbean in purple. It wasn't just a few days later that the first U.S. cases were actually confirmed. You had travel restrictions put in place and everything, and we started seeing these stocks sell off. It was a real shame there. From the highs, they sold off double digits. What I did is I put a little chart here together to show you from their most recent highs. It just kind of marks each one there. How far have they pulled back? You look at Carnival, it's clearly the worst performer. Today got a little bit of a bounce, I believe, but down double digits, all of them down double digits from those highs there. Carnival Cruise Lines is officially the worst performer. You'd expect it to be the worst performer. It's the largest out of the groups there. I think somebody pointed that out the other day. They've got over 100 ships around the world, and they've had officially they were the first to actually have cases of coronavirus confirmed on the cruise ships there. They had the quarantine ship and everything. So you can understand why that one's a little bit underperformer. Now, here's the thing. Carnival wasn't really that strong to begin with. So if we go back over to the charts here, if you look back just from what you can see, it's about a year time period. You can see that Carnival was already in a downtrend. If we zoom out, you can see it was in a severe downtrend since the beginning of 2018. Actually, in last year at this time, 2018 in January, hit a high, and it's been downtrending ever since. Now, should you buy the stock? That's what everybody's asking here. The stock's been in a downtrend until the last earnings report. If you look at the last earnings report here, I've got it kind of highlighted on the screen there. They beat on earnings by 11 cents. They beat on revenue by $222 million. It was the first time in a year that they didn't lower guidance. The stock started 4.82% higher, finished the day up by 7.63%. All of that very good news for these cruise ships companies, especially Carnival, to come out of a downtrend there. So a lot of people thinking, hey, here's the bottom. We found our opportunity here. You had a very simple, clean technical pullback, and a lot of people thought, great, I'll buy that stock because I missed the earnings play. I'll buy the pullback. And then unfortunately, the whole coronavirus thing hit, and that really, well, took the wind out of their sails, to use a really interesting sort of Kramer metaphor there. So if the worst is behind us with this coronavirus thing, as we kind of saw in the news today, you would kind of think that these stocks would do well from here. They already had strength behind them. You already had lots of positive momentum going on. So should you go ahead and take a look at buying Carnival Cruise? Well, I can understand why you choose it. I'm a little bit biased here because I like Royal Caribbean myself. I think that Coco Cay Island is probably the coolest thing I have ever been to in my life. They spent over $100 million on it. A lot of these companies have spent the last couple of years spending tons of money to revamp ships, buy new ships, build islands, and all the great experiences along the way. If you take a look at valuation for Carnival Cruise Line happens to be the most oversold stock in the category. It is the biggest, has the largest market cap by far, I believe there, but it's also the lowest valued. So if you see the stock price falling and you say, is that a discount? Well, from a technical basis, that is a discount. On a fundamental basis, doesn't matter if you look price to earnings, price to sales, price to books, however you want to look at it fundamentally, it is currently discounted and having the lowest valuation of the three if you look at them very closely. Take it a step further, Carnival Cruise Line is is the highest yielding stock in the cruise industry there, 4.8% as of yesterday when we put this together. And so, well, that's attractive. If you look at the consumer discretionary space, it is the 7th highest yielding stock overall. So you get a high yield, low valuation, technical discount in the short term. I can't tell you whether to buy it or not, but I can give you the data, and I hope that helped you there, at least in the short term. As far as earnings tomorrow, here we go. That was my fun sort of rant on Carnival Cruise, so hopefully that answers a lot of your questions. Tomorrow you got CVS reporting in the morning, Teva Pharmaceutical, Molson Coors, which is ticker symbol TAP. You got the CME Group, which will be interesting from all the volatility lately to see how they've done commission-wise and transaction-wise. That's how they make their money, or a lot of their money. Cisco will report as well, and then in the Cisco reports after hours. CenturyLink will also report after hours. Applied Materials, MGM, which will be interesting because of the coronavirus, so expect some volatility there. Network Appliances, and Equifax, which hasn't been in the news in quite a while, so we'll see what's going on there. Tomorrow you've got Jerome Powell testifying again. You've also got another Fed member coming out there and speaking, and I think that is a record time for me to cover all of this wonderful stuff that I was focused on. Remember, Thursday, our class for customers is actually going to be on recession statistics. We got a lot of geeky stuff coming your way. You'll just go right into the dojo and check it out there if you like. It'll be live at 8 o'clock on Thursday. If you have any questions, I'll take my shot here and try to answer your questions. If not, I will get out of the way. We'll see what we can do. I love it. Well, okay, sorry if I missed any of your questions there. Hard sell, you guys talking about the hard sell. I don't get it. I just, if you're going to try a hard drink, I got a whole bar over there ready for you guys. Got all the good stuff. You like ExxonMobil here, the discount, I can't blame you. You know, a lot of these stocks, especially in the energy space, you don't want to look at some of the stocks that have already struggled. ExxonMobil obviously selling off aggressively there, and it's kind of a staple in a lot of funds, so I can understand that. A little bit of a bounce today. It's trying to find a bottom. You can kind of see people trying to pick the bottom on that one in this range. I don't know if it's 60, 61 where it ends up coming in there, but yeah, I can't blame you. Microsoft, what do you think about Microsoft? It's very extended in the short term. Today seemed to be quite a bit of a profit-taking pullback. The volume was higher as well if you looked at the shares traded. So very understandable if this pulls back for a while and takes a little bit of a break. I wouldn't worry about it. I wouldn't be interested in it. No. Thank you for the compliments there. Do you think Microsoft keep dropping from a technical perspective? Yes, especially after today. You think that would have put in a temporary top. I've been wrong. I'm not saying I'm right on this one. I'm just saying when you look at that stock, how far it went in such a short period of time, it's very normal for people to say, I'll take a little off the table. I had 1,000 shares. I'll take 300-400 shares off and just see what happens from here. Maybe I'll add them back cheaper. That's the mindset of that kind of trader when a stock does what it does. Yep. Oh, you like that Luckin Coffee. I haven't looked at it recently here. That sell-off was pretty aggressive, back below the 50-day. I don't think it goes to highs in the short term. I think you get a pop if we keep getting good news out of China and everything starts looking good there again, and it doesn't seem to have that much of an economic impact. Right now, as this drags on, no, I don't think it runs back to highs there. That would be a tough one. I can't tell you if a stock is a buy or not. I can tell you that the semiconductors look strong, Micron Technologies look strong, staying strong, a little choppy in the short term, like a lot of the things we pointed out. That's just the market's indecision at the moment. There has to be time periods of that, of course, and I think that's the case for Micron right now. Just a little bit of back and forth, people trying to gauge whether they should stick with it, analysts trying to gauge whether they should raise price targets or not, earnings obviously digesting that as well. Yep. NVIDIA, new highs here today. NVIDIA looking good. It got the upgrade the other day thanks to gaming, so obviously that's helping in the short term. Supposedly a strong gaming space out there, which is going to help them overall. I would agree with that analyst based on what little I follow in the gaming space. We do have at least a little focus on that, but yeah, it looks good in the short term. Always have a plan, though. What's the time period? What are you trying to do with it? If it goes to 275, you're going to do something? If it goes to 300, is it going to do something? If it goes to 250 before it goes to 300, are you going to do anything? Have that game plan. Very important to have that game plan. Thoughts on Under Armour or Goodyear's current value with today's big drop? Under Armour's got some work to do. They weren't very positive. They've got some restructuring going on, or at least they're planning on restructuring. And so they got a lot of work to do. I don't think that's one you got to rush into. That's one of those ones I'd make that comment. Go ahead and let it bottom for a while, right? Let it build the momentum back on the media. See people get a little excited about it again. I don't think you have to buy the absolute low on that one there. Now, Yep. Is it true that day trading is considered gambling? No, but some people do treat it that way. And in that case, I guess you could say some people treat it that way. There are people that try to day trade that just think it's easy and they lose. Promise you. Go try it. I promise you you'll lose. I've literally taught tens of thousands of people all over the world how to day trade, and I've watched a lot of them not take it very seriously. I've seen some of them, not many, but I've seen some of them take it really seriously, treat it like a job, treat it like they're going back to school, college, whatever. They do really well. It's just like anything else. You don't get to be a doctor just by kind of floating through school because your parents told you to go be a doctor, right? You're not going to be a very good doctor. You might not even make it out of school. Unfortunately, with trading, it means you're going to lose your money. So careful. Stay small. Just test. Have a good trading plan. Oh, you're playing with the options there, hoping to grow. Were you the one with the put spread on, what was it, AMD? Come down to Florida. You're going to, oh, come on down. We'll have a drink over there in the speakeasy there. Tell me all about your stories. I love it. Just give me a call first. Make sure I'm here. I'll leave the door open for you. Cool. What do you think is going to happen with Kraft? I mean, I wish them the best. Obviously, it's been quite a struggle there. They've been selling off different parts of their company and everything. It's the same thing. There's not a need to pick the bottom in this one. It's just considered dead money right now. So to buy the stock, you're asking for a prediction, right? You're not asking for anything fundamental or anything technical at this point. People are just not messing with this stock right now. So anytime you see a stock do that, I just look away for a while. There's just no reason to commit to something that's not really moving. There's just nothing good you can say there at the moment. We will see. I'm guessing you're not asking about India. You said, can PIN get to 30 this year? PIN would be the India ETF, and I don't think it gets to 30 this year, if that's the question. But I'm guessing you might have meant to say Pinterest. Can Pinterest get to 30? I could see that. By the end of the year? Sure. I would bet that there's probably quite a few analysts that have price targets around 30. You've got Barclays with a price target at 30. You've got JP Morgan went up to 26. You got Bank of America up at 32. You got Wells Fargo at 35. You got D.A. Davidson at 33. So they're all pretty bullish on this as well. I would reference those and not my my personal comments. I love it. What resources would you suggest for me to introduce a newbie to the world of investing? They got to want it, right? I'm going to do a video on how to get kids interested in investing. I just think it's really simple process that doesn't need to be so boring and like, hey, you have to save for the future. So I'll do a video on that probably next week to talk about that. But other than that, if the person's not interested, you know, it's like anything. It's like you could talk to me about baseball all day. You know, I don't really care. You're not going to get me truly interested. One time I went to a baseball game and we played this game where we all had quarters, and for some reason I lost all my quarters, but you had to give a quarter for each thing that happened or something. I don't know. That was kind of interesting. Other than that, they have to be interested in investing. You got to find a way just to get started. And if it piques their interest, great, but you can't drill somebody to get going. It's just, I've been there. It's hard. Dustin, are you familiar with Paycom? Yes, sir. Yeah, we own Paycom. Very familiar with that one. Little pullback here in the short term, but it's kind of like this whole category. A little bit sloppy right now. If you dig into some of these companies like this and you put them all on a chart, put them all at the same, sort of on the same chart, you're going to see a lot of chop in there. I think that's normal. A lot of these had really, really, really great runs. Totally normal for things to take a break there. Can you pull 3 ETFs and compare 2019 performance for those? Yeah, could I? Sure. Absolutely. Not at the moment, but something we could do. Actually, I can't share any screen with you at the moment. I'm sorry about that. We're trying to, things look a little different there. We're trying to make this a little easier on the system here. I love it. Do you follow the Hindenburg Omen symbol? No, I don't. Heard of it, but I don't follow. You think green energy stocks are interesting? There's actually not a very close correlation between the two, or I should say inverse correlation between the two. Could you follow it just because you're interested in that? Yes. But there's not really that close of a correlation like you would look at, you know, an inverse correlation to a sector relative to bonds or something. It's just not there. It probably will be at some point, because this whole ESG type investing and people wanting to be conscious about the actual products they invest in, it's building steam. So maybe at some point as that builds steam, there would be, but as of now, no. Any entry on thing on MasterCard getting entry into the Chinese market? I think a lot of that's kind of on hold. They did get what China calls approval in principle. Remember when they did the whole trade deal with us, that they agreed to phase 1 in principle, and now they just had to do it? It's kind of their way of saying, yeah, we're cool with it, but nothing's official just yet. Let us have our time. Kind of like when if you buy a house and they say, we'll accept your offer, you don't own the house just yet. We're not quite there, but it is promising. That's the latest on MasterCard. Yep. Why don't you never discuss ETFs? I do every single day. Our sector breakdown, we use ETFs to show that. And when you look at the screen on the top, you can actually see each ETF. But every single day, I cover the sectors by using ETFs. I like to use sector ETFs for that. So I do. And sometimes when I show the market, I'll show the S&P or the Qs or something like that. But other than that, I like to look directly at the index. I use the futures. But yep, every day we use the ETFs for you there. So hope that helps. All right, I think I'll wrap it up from there. I appreciate you stopping by here today. Hope you learned something interesting and new today. I thought I'd try something different, so hope that works for you. You guys enjoy the rest of your day. Remember to hit the subscribe button and all that happy stuff. Check us out at jazzwealth.com. And thanks. We'll see you later.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new FinTips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.